What's up, Trader's Edge? It's Mark Sebastian. Today I'm going to talk about why markets sold off, what's going on geopolitically, and how I'm monitoring it. We're going to take a look at bonds and VIX, and I will tell you that one stock to keep an eye on. So with that, let's dig in. All right, everybody. If you missed Hannah and Andrew's discussion on how he uses option fingerprints to find long-term option buys, then you can click the replay in this email. If you're watching me on YouTube, please like and subscribe. If you have a question, leave it. I'll answer it. All right, so not the S&P's best day. Nice day on, ugly day on Friday, nice day Monday, not as nice of a day on Tuesday. We haven't really gone a lot of places. We basically closed Tuesday at where we closed on Friday. But you can see movement seems to have flattened out and volatility is picking up. Again, S&P down about 0.8. NASDAQ down 1%, Dow down a little bit less than that, and the Russell 2000 actually not a great day, down about over 1%, the worst performer. Again, volatility is picking up across the board. Why? Tensions continue to rise between Iran and Israel, and speculation the U.S. might enter caused oil to explode. If you track crude and the S&P futures together, you can clearly see basically as crude rallies, the S&P was bottoming out. Crude kind of flattened out. We closed not on the lows of the day. Where we were when we made this initial run. So crude is our leading indicator for this market. Crude going up is telling us everything we need to know about what's happening in between Israel and Iran. And right now, things continue to escalate, not de-escalate, which is what we would want to see. If oil markets continue to rally, that is going to be problematic for the rest of the market. Now, even as much as oil is moving, believe it or not, the option prices and a name like USO are sky high, way above how much this ETF is actually moving, which is high. So the options are about a 65% volatility. USO is moving at about a 50% volatility. So there's a huge premium. On the other end, XLE, it's actually moving less than what they're charging you for the options. The options closed at about 27.56. It's moving at about 30. So if one was so inclined, one would buy straddles in XLE, sell options in USO. One would think that'd be a pretty decent sized hedge. So you're following oil. That's telling you what's going to happen in the market. The outputs of that, VIX. Now, VIX futures term structure starting to enter partial backwardation. That's a sign that markets are starting to get spooked, and a sign that we could make a wild move up or down in volatility, which would mean a wild move for the S&P 500. So VIX is telling us expect wild movement. Now, if there's something that's going to stabilize the market, could be bonds. TLT had a real nice rally on Tuesday. As it rallies, that's going to benefit the market, and you might see, things stabilize a little bit. Could certainly be, gives us some padding where if there's a deal, bonds are not going to get in the way. That would be my prediction. So, having, and bond vol is not very expensive either. So I like kind of a long bond play here, as, that's an area that hasn't heated up and will if the U.S. enters. So tomorrow is VIX options expiration. So the morning could be kind of interesting. Don't get overly involved in anything until after about the first half hour. That's usually how long it takes VIX expiration to work its way through. So just be aware that that is hitting you tomorrow. Once again, make sure you check out that video of Hannah and Andrew discussing long-term plays. And if you're watching me on YouTube, please like and subscribe. I am Mark Sebastian. I am your only option. I hope you have a good one.